Welcome back to Reds Roundup. In this video, we're going to be looking at David Tepper's portfolio as of 2020. Let's get right into it. So first off, you may be wondering, who the heck is David Tepper? How did he get his money? Why is he so successful? So he is head of Appaloosa Management. He founded the firm in around 1993 after working at Goldman Sachs, and they didn't promote him. And boy, was that a mistake. He's now also the owner of the Carolina Panthers and a Major League Soccer team in the United States in Carolina. So he has $12 billion of net worth, which is quite a lot. And like I said before, he's the owner of the Carolina Panthers, a fairly successful NFL franchise. He's a legendary manager of Appaloosa Management, posting market-beating returns. It's pretty incredible if you look at his returns. In 2001, when the market was crashing, he posted a 61% return, which is pretty impressive. 61%. Wow. So we're going to be looking at some of his portfolio buys, sells, and what his top holdings are. So first off, let's look at his changes in terms of what he bought. So he bought quite a bit of cell phone and wireless network stocks. We have T-Mobile, which he had a sizable portion of that was Sprint, and that got converted to T-Mobile when the merger took place, and as well as AT&T. He bought AT&T this quarter, and actually a massive position here on this side. We see the percentage impact on his portfolio. So AT&T is 4.77% of his portfolio. T-Mobile is 9.28% increase, that is, because this is a new buy. Alibaba, he bought a little bit more of. Visa, MasterCard, and PayPal. So these three companies are some of the banking tech stocks, you might say. Financial tech, Visa, MasterCard, and PayPal, payment processors that don't actually do banking, but they're intermediaries of sorts and very, very effective businesses at generating cash. And then here at the bottom, we have a few more. The main one I want to point out, I do like Cisco and Disney as picks, very interesting picks. I've thought about Cisco quite a bit. Thought about making a video on them as well. Very good pick. But at the bottom, we have Altria. I've made a video on that. I'd encourage you to go check out the Altria Group video. It's one of my top videos, in my opinion. He just bought quite a bit of this. And as we see here, a lot of his stocks that he buys, he's not afraid to add more to. And these are only his top buys. And Square at the bottom. Sorry about that. We can't see. So moving on. We have his portfolio changes in terms of what he sold during this quarter. So we have Allergen, he sold out of them, and that was a 3.77% of his total 13F filing portfolio. And then we have Sprint, which was converted into T-Mobile when they merged. And here we have some tech names I highlighted in yellow. The three tech names, we have Amazon, Facebook, and Google. Now, a lot of people are very bullish on these stocks, including people like Joel Greenblatt, who's another terrific investor. So we see here Amazon, he just sold a little bit of them. He's reducing the position a little more. It really didn't have that big of an impact on his portfolio as a whole, but in terms of these positions, it's semi-sizable. And then he had a small position in Tesla, which he trimmed quite significantly. He trimmed it down 83%, probably near the highs, I just have to assume. So this is what he sold. He's still very bullish on big tech. So now we're going to look at his top 7 holdings just to get an overview of what he's most concentrated in. And we're going to see from his portfolio next, when we look at the total concentration, that he's concentrated, but at the same time has some diversification. So we see between his top 3 holdings, that's more than 30% of his portfolio. Those are some concentrated picks that he must really believe in. Amazon and Alibaba, the two biggest ones, as well as T-Mobile coming in third, making up over 10%. So these are his 3 biggest picks. He believes these are his best picks in the market right now. But then we also add some more technology companies. All of these names are market disrupting tech companies in some ways, but then also have different quirks to them. So we see Amazon and Alibaba are the shipping companies of sorts, fulfillment of products. T-Mobile is a tech company in terms of the new 5G technology, and then continuing to develop the network components, the mobile networks. And then Facebook is a tech company in, everybody knows what Facebook does. And then Micron, this is one that I've thought about making a video on too. Tell me if you want me to, leave a comment if you want me to make a video on Micron. They are a pseudo commodity play in the tech space. They do memory components for computers. So pretty interesting business here. A lot of super investors think this is a good pick, including Monish Pabrai and many others. Google, what can you say about Google? A very dominant business. And then AT&T, another wireless holding company. Now here's a spreadsheet that I made of his portfolio. It's a little bit more complex than what I just showed you. I decided I would make it easy to look at first, and now we're going to get more into the meat of things in terms of his holdings. So I'd like to point out here just a few more of his holdings that I've noticed. Again, Altria Group, one of my top picks, and I think it's very interesting that he decided to buy in as well. Cisco, another interesting one that I've thought a lot about over the past months during the coronavirus crisis. It was on my mind, let's just say that. Micron Technology, again, another top super investor pick right there. And then we also see here in picks number 24 through 38, just a lot of really small positions that are pretty interesting to me. I don't necessarily understand what the point of having a position of 0.8% of your portfolio is, or 0.1%. I don't really understand that, but obviously he knows more than me. I won't kid anybody here. He's a very smart man, and I'd hope to learn from this just in terms of portfolio sizing, because that's actually as important as the picks you make. Because if you ever heard Warren Buffett and Berkshire Hathaway, if you just even weighted their decision making, you just put everything as even weight, they would actually be fairly average. It's actually the position weighting that made them famous. So that's an interesting thing to point out here. Let's look at this pie chart. I don't usually like pie charts, but in this case, I think it's an interesting thing just to visualize. So we see here with his top holdings, making up 50% of his portfolio is his top 5 holdings, which is concentrated like a lot of investors, but then also very, very diversified on the back end. So we have the names like Alibaba, Amazon, T-Mobile, Facebook, and Micron really making up a big chunk of the portfolio. And then we have the mid section where there are quite a few more names. And then the last quarter, there's just quite a few names. It would take too much time to name them all. I encourage you to go do your own research on a website called Dataroma, which I used for this video. It's a very good website. So yeah, very interesting. But then last chart I want to show you here is the sector analysis of his portfolio. So we see here that he has almost half of his holdings in technology stocks. And if you include information technology, telecommunications, and even, I'm not sure if Visa, MasterCard, and PayPal are in technology, but they definitely could be. And if you include those in technology, maybe it's even bigger. So he's got, in my opinion, over half of his portfolio in tech stocks, which is very interesting. A lot of people think tech is overvalued, but he's actually been on record. I encourage you to check out this CNBC interview saying it's not the big tech that's overvalued necessarily. It's really the small and up and coming tech, not necessarily super small, but you know the names, the data dogs of the world, the tech companies that people think are going to be the next Amazons, Facebooks, Microsofts, and Google, but are more like the pets.com of their time. So it's going to be really interesting to see how that plays out, if it's going to play out like he says. Joel Greenblatt says the same thing, I'd like to point out. That's an interesting thing. These two super investors, they agree a lot. Joel Greenblatt is overweight Facebook, Google, Microsoft. Same thing with David Tepper. They believe in the large cap, market advantaged with the network effects tech stocks, but they don't actually believe in the smaller tech stocks like the data dogs, like I said, that need a long way to go before they're profitable, but are right now being valued like they are Amazon, when who knows, they probably won't be. So that's some food for thought, if you will. I encourage you to go check out Dataroma. Go look at some of David Tepper's interviews. They're very interesting, very smart guy. And he's going to let you think for yourself too. So I can appreciate that about somebody. So thanks for watching. Tell me what you think. Leave a comment. As always, give me a like if you liked it, dislike if you didn't, and subscribe if you want to see more. Thanks.